right. The system's broken. It's all about incentives. You nailed it. And I wrote about this in my senior thesis at Yale 30 years ago. We need term limits. We need to reevaluate our political system and realign the incentives. Congressmen and senators shouldn't be trading their personal portfolios on legislation that's about to happen. That's just absurd. And they shouldn't be putting forth bills or legislation that will protect companies that are getting them reelected. It's just absurd, and it happens with both parties. I can't blame either party, but the government spending is out of control, and the incentives are just not aligned to have a balance of power. It's just what it is, and so you can see exactly what I said. That what you're describing too is part of the Cantillon effect. Whoever's closest to the spigot's going to get the benefit of that expansion of the money supply and the regulatory framework, and that's just reality. So my reaction is, we have a broken system and we need to fix it, and that's going to be a painful thing, in my opinion.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, James Lavish explores inflation's impact on your savings and how Bitcoin may offer a better defense. He'll reveal real-world examples and practical tips. Let's catch him up to know more.
You remember last time, obviously, the market sold off initially, then roared to life when it realized that there was going to be some deregulation. We do expect the Trump effect to take place, where there's kind of two sides to it. There's that deregulation that will allow smaller companies to be more profitable because of the red tape. We both know just how expensive and onerous it is for small companies to operate in this system. It's just what it is. So that could be helpful. He said drill, baby, drill a lot, which would actually be anti-inflationary because energy prices would come down if we had more oil. But the harsh reality is, or the stark reality is that Trump loves the stock market. He points to it every single day of his administration, pretty much. He came out this morning, even with what's going on, he came out this morning with a headline saying that he literally said that rates are too high. So he's already putting pressure on the Fed, and he's not even in office yet to lower rates. So, but that's a lot to get our heads around. So let's go back up to like 100,000 feet. We've got a lot of things going on. We have had some inflationary numbers coming through, and I'll share a chart with you that came from Apollo that you can put up on the podcast once we're done taping. But it'll show and you've seen this chart before, Anthony. It's that chart that shows the 1970s inflation, how it spiked, it came back down, and then it spiked again. You and I lived through it, we're basically on the same exact trajectory as that. The difference is back in the 70s, that was a lot of that inflation was driven by that oil shock, the shock that we had out of the Middle East, that we had that embargo and the Iranian conflict, and we couldn't get gas in our cars, so that energy cost was so high. That's what really caused an inflation spike back then. It's much different now.
Bitcoin slumped this week, dropping below $93,000 after touching $100,000 on Monday. Has some investors worried, but experts insist it's only a temporary setback. Arthur Hayes, founder of BitMEX and chief investment officer at Maelstrom, predicts Bitcoin will soar to $250,000 in 2025. He believes that President Donald Trump's policies will weaken the U.S. dollar, driving more people toward Bitcoin as a hedge. While the Federal Reserve's reluctance to cut interest rates and stronger than expected non-farm payroll data did dampen enthusiasm, Hayes expects renewed momentum once Trump officially takes office on January 20. He's not alone in his optimism, as pro-crypto appointments like Paul Atkins at the Securities and Exchange Commission and David Sachs as AI and crypto czar point to a supportive environment. The big crypto lobby has funded campaigns leading to Republican dominance, raising hopes for new legislation favorable to digital assets. Many also anticipate the continued growth of Bitcoin exchange-traded funds, which have already attracted over $35 billion in inflows since their approval. Analysts say that if these conditions persist, Bitcoin's short-lived volatility will pale in comparison to its potential long-term gains. Most experts indeed agree it's just a hiccup on the path toward far higher valuations.
The difference now is that we're running 130% debt to GDP deficits versus 30% back then, right? So, I mean, it's a huge difference, and we're seeing that the economy is fiscally driven. We're running $2 trillion deficits, and that is inflationary. So that's kind of like the way, way, way up high view of where we are, right? So then you look at it and you kind of drill down and you think, well, there's two economies going on. I know of people who are struggling right now. They're kind of middle-class people who are really struggling with the discretionary spending. Is just, they don't have discretionary income like they did before, where they could just go out and do things like just for fun, entertainment. So much of their paycheck is being taken up by just rent, food and energy, gas and that kind of stuff, that and especially insurance has gone through the roof, both health and auto and home insurance. I mean, this stuff it's really weighing on that lower demographic, and you can see it because the debt numbers are going straight up, the personal debt numbers, and delinquencies are rising. So what's happening? Why does the economy still look like it's roaring along? Well, there's two economies. The economy that's benefited from the high interest rates is that high net worth demographic. Over the past few years, in the last 4 years, Anthony, the top 1% has gained over $16 trillion in wealth. And that's versus the bottom 50%, all of them together gaining 1.8 trillion between all of them. So, I mean, you've got an economy that's rocking along. You go out to restaurants, you see, you go on airplanes, you see people are either charging and just, you only live once, YOLO into this economy, or just hoping it's for the best, or just the younger demographic, the younger generations are just giving up on even being able to own a house. So they're just spending money on experiences. So it's a completely different world that we live in right now. And there are two worlds that the economy is operating in, and that's just reality.
Bitcoin briefly sank to $91,055 on January 9, prompting speculation of a plunge below $90,000. Yet multiple factors suggest such a drop may be unlikely. One indicator is the Crypto Fear and Greed Index, which fell to 50 from 78, shifting market sentiment from greed to neutral. Historically, Bitcoin often rallies when sentiment dips into neutral or fear territory. Further support comes from institutional investors, who have snapped up over 34,000 BTC since December, according to BlockTrend's head of research, Carl Oliveira. This institutional appetite seems to be overshadowing short-term panic selling, which analysts at CryptoCoin view as a window for savvy traders rather than a cause for alarm. Rumors of the U.S. government liquidating $6.5 billion in Bitcoin within 6 trading days appear unrealistic, especially with President-elect Donald Trump's pro-Bitcoin stance. As a result, many believe Bitcoin's short-term volatility masks longer-term strength. The sudden liquidity sweep below the previous range may clear the path for a V-shaped recovery, keeping Bitcoin above the critical $90,000 mark. Economist and trader Alex Kruger remains optimistic about Bitcoin's long-term trajectory, despite it being 13% below its all-time high. He attributes much of his positive outlook to the approval of spot Bitcoin exchange-traded funds in January 2024, which he believes will fundamentally change Bitcoin's traditional 4-year halving cycles. According to Kruger, the influx of capital from these ETF will sustain a closer correlation between Bitcoin and broader risk assets, signaling a shift from the old pattern, where the halving events primarily drove market sentiment. He also emphasizes that although conditions are ripening for what many call a supercycle, this doesn't translate to a non-stop climb. Instead, Kruger foresees shorter corrections and smaller dips, as long as global equities and economic conditions hold steady. Opinions on Bitcoin's future remain mixed. Anthony Scaramucci, CEO of Skybridge Capital, continues to support Bitcoin, but has also turned attention to altcoins like Solana, suggesting a more diversified crypto approach. Meanwhile, economist Peter Schiff criticizes Bitcoin as the riskiest asset, calling its safe haven status into question. On the opposite end of the spectrum, Arthur Hayes, co-founder of BitMEX, theorizes that upcoming changes in U.S. banking regulations could catapult Bitcoin's price to $1 million. Despite these differing views, Bitcoin's resilience and evolving market conditions keep the debate alive. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.